Well, China is stepping up its challenge to the US dollar's global dominance by promoting the yuan as an alternative currency for trade, investment and reserves. With uncertainty around the dollar rising from political shifts to market fluctuations, Beijing is pushing hard to make the yuan a bigger player worldwide. As the US dollar faces growing challenges from erratic policies under Trump to geopolitical tensions, China is accelerating efforts to internationalize the yuan. This means making the yuan easier and more attractive to use in global trade. Recent measures include allowing foreign investors to trade more yuan-denominated futures and options and expanding access to China's domestic markets. China is also rolling out its digital yuan with plans to open an international operations center in Shanghai. The digital currency aims to be a modern alternative to cash, potentially making cross-border payments faster and even cheaper. Despite these advances, the yuan still faces big hurdles. It makes up only 2.89% of global payments, far behind the US dollar's 48.46% and the euro's 23.56%. And in foreign exchange reserves, the yuan holds just 2.2%, though its share in China's trade settlements has grown to 26% and is expected to hit 40% by year end. Global central banks are increasingly diversifying away from the dollar. A recent survey of 75 central banks managing $5 trillion showed one-third plan to strengthen gold holdings. The dollar dropped to 7th place in preferred reserves, with 70% citing U.S. political instability as a concern. Meanwhile, 30% plan to increase yuan holdings over the next decade, potentially tripling its share to around 6%. The euro is gaining short-term favor in reserves, but the yuan is seen as a longer-term challenger, especially as Asia seeks to reduce dollar reliance. China promotes bilateral yuan trade settlements, especially in energy and commodities, and encourages the use of yuan through subsidized loans offshore.